Farmer sentiment declined again in June as nearly half of producers pointed to high input costs as their biggest challenge facing their operations. In the latest Purdue University CME Group Ag Economy Barometer survey, 47% of farmers identified input cost as their top concern, more than double the number who cited low crop and livestock prices. The concern is not just about higher expenses, it's about what those costs are doing to profitability. Hello, I'm Michael Langemeier with Purdue University, and this is Purdue Commercial AgBrief, a quick research-based insight to support better farm management decisions. Today we'll look at what's driving the continued decline in producer sentiment, why input costs remain such a major concern, and what the latest survey results could mean for your operation. Before we get started, don't forget to like and subscribe for more updates. The Purdue University CME Group Ag Economy Barometer Index fell from 119 in May to 113 in June. Both measures of producer sentiment declined, with current conditions index falling by 5 points and the future expectations index declining by 7 points. The decline in the current conditions index is especially important because it reflects how producers are viewing their farm's financial situation today. The index is now at its lowest level since December 2024, suggesting that many producers continue to feel pressure from tighter margins and a more challenging cost environment. When asked about their own financial situation, only 12 producers reported that their farms were financially better off than they were a year ago. And of course, that's a combination of input costs and prices when they're doing those computations. When producers were asked what is limiting improvement in their farm's financial position this year, no surprise, it was high input cost. This was the overwhelming response. 42% of farmers identified input costs as their biggest constraint, followed by low output prices at 17% and weather at 14%. We've had some pretty unpredictable weather this year, and so the fact that weather is 1/3 of input costs just tells you how important input costs really are. Farmers are always concerned about commodity prices, but the current challenge appears to be focusing on the cost side of the business. When input costs remain elevated, improving profitability becomes less about simply increasing production and more about making the right management decisions around expenses, efficiency, and risk. That pressure is also influencing investment decisions. The Farm Capital Investment Index declined slightly in June to 40. That was only a 1-point decline, but it's the lowest level since September 2024. This index measures producers' willingness to make large purchases such as machinery, buildings, and other capital investments, excluding land. A weaker investment index suggests that many producers are taking a more cautious approach and evaluating whether major purchases fit their current financial position. For many operations, this type of environment increases the importance of knowing your cost structure and understanding which investments will improve efficiency or profitability. And of course, it depends on what prices do the rest of this year. Looking ahead, producers remain cautious about the next year. Only 22% of respondents expect their farms to be financially better off a year from now. And when asked about the longer-term outlook, expectations for good times ahead have declined compared with last year. However, the outlook is not negative across every area of agriculture, and this is where it gets really interesting. One area where producers remain optimistic is farmland. This is true in both terms of the short-term outlook and long-term outlook. The short-term farmland value expectations index declined from 130 in May to 124 in June, but it's still relatively high. The long-term farmland value expectations index increased to 166, tying the highest level recorded in the survey. I think that's quite remarkable. That was higher than even during that 21, 22, 23 period where land prices were climbing very rapidly. This suggests that while producers remain concerned about near-term margins, many continue to view farmland as a strong long-term asset. Overall, the June Ag Economy Barometer shows a farm economy still dealing with significant cost pressures. Input costs remain the biggest concern, and those costs are influencing everything from financial outlooks to investment decisions. You can read more about the June Ag Economy Barometer on the Barometer's website linked in the description below. Thanks for watching. If you found this useful, subscribe for more research-based insights, and we'll see you next time.